Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Dave Erfle. We're going to be touching on gold recently closing at an all-time monthly closing high. What's driving that move in gold, especially on the futures market up to right around 2,500. We're also going to talk about silver, GDX, SIL, and even copper that have done a bit of a round trip just in the last couple days on the back of the Fed meeting and the trading the day after, as well as M&A that continues in the precious metal sector. Dave is the founder and editor of the Junior Miner Junky. A link to his website will be posted in the show notes. Dave, let's start with gold. As the futures contract rolled over in gold to the December contract, we saw a pop in the price. Also, a follow through today as gold recently just touched above 2,500 and is now right at that just under $2,500 level. Seems to be one of the few markets that's up today, other than the dollar and bonds. Dave, I guess a simple question here. Is it geopolitics that's simply driving this move in gold and even the dollar?
Yeah, Corey, it was interesting to begin the week. We had Fed week coming up. Everybody was, all eyes were on the Fed. But to begin the week, we had Middle East tensions flare up. We had a Hamas leader assassinated. And the gold price, interestingly, had a monthly close a half hour ahead of the announcement of the Fed policy decision and an hour before the press conference where Jerome Powell tells reporters why he did what he did. So we had the COMEX close a half hour before that, and the gold price closing just below 2,500 on a monthly closing basis right before the Fed meeting, because usually we don't have much going on in the gold price into the Fed. So yeah, it was mostly geopolitics. And also I think it's the debt ceiling coming back into focus yet again. I mean, the U.S. debt, not debt ceiling because there isn't one. It went over 35 trillion, and now it costs per day $2.4 billion per day just to service the debt. So that's interest payment. So I think that had something to do with it. And then when the Federal Reserve came out and did what they did and explained what they did, the market was saying, look, okay, the Fed's going to lower in September for sure now. It's only a matter of how much of it are they going to lower. Is it going to be 50 basis points or 25 basis points? So the gold price went up over 2,500 intraday yesterday in the aftermarket. And also there was the tensions in the Middle East. It looks like there's going to be retaliatory action from Iran. Russia backs Iran. The U.S. backs Israel. That's another proxy war possibly in the making. So the gold price is acting really well here. And the dollar also is getting safe haven bids today along with the gold price. But yesterday we had, at the end of the day, the stock market was going up on the rate cut expectations also. But in the last half hour of trade, we had a sharp reversal in the stock market, yet gold shares were holding their really solid gains. But today the stock market's tanking and we're seeing a little bit of profit taking in gold stocks.
Yeah, Dave, I was going to ask you about the stocks just because they had a really good day yesterday. Almost everything was in the green, and really the whole resource sector was in the green. But it does seem to be that safe haven bid you outlined where the dollar, bonds, and gold are getting the bid, and it's not really trickling over into the equities today. And I think some people would look at the price of gold getting to 2,500 and now just slightly under it and still being disappointed in where the gold stocks were. So how are you looking at something like GDX, GDXJ?
Yeah, I mean, also what's kind of got lost in the shuffle was the number two gold miner, Agnico Eagle, announcing a really solid quarter, and Kinross, I think they're the number six gold miner, they announced another solid quarter. So these margins that they're making on these higher gold prices are really affecting their bottom line. And we had Newmont last week kick off earnings season with a blowout quarter back to back. And Agnico's now, this is a third consecutive blowout quarter. But what's interesting is neither of these companies announced increases in their dividends. So that tells me that they're probably going to use this cash maybe to add more ounces with some more M&A. They need to add more ounces. But as far as GDX and GDXJ are concerned, we had a whipsaw move in the gold price, and GDX and GDXJ really didn't come off that much when the gold price sold off from 24.50 all the way down to 23.25 or so. So we had a huge correction in the gold price, and the stocks kind of yawned at it. And that was telling us that, hey, this is just a small little correction and gold's going to start going back up into the Fed meeting because they're going to have to start cutting and the market knows it. And sure enough, that's what started happening this week. And especially noticeable was the silver stock. The previous 2 weeks, silver went down over 10%. And if you take a look at Pan American Silver, one of the largest silver miners, it was only down 8% in that time. And several of the quality juniors pretty much yawned at that move. And look at SIL and SILJ, they really didn't correct that much when silver was down over 10%. That was also telling us that, hey, these gold stocks and these silver stocks are starting to mean revert. And that is happening. It's not glaring yet, but it is starting to happen.
So, Dave, where are the best opportunities? Because these majors have come out with some good earnings. They've already gone up a lot this year, but on the back of the earnings, they got a little pop. But again, there's not much follow through right now. So, is it in the majors that still offer some of the best opportunities, considering how far off of their even 2022 highs they are? Is it the silver stocks? Where are some of the best opportunities for investors that aren't already all in this sector?
Yeah, I still think the best opportunities in the quality juniors and in gold and especially silver. In silver, there's really not that many. So all it takes is for you to accumulate a couple of the best ones in your basket, and you'll do really well because the silver stocks are still pretty much being ignored, but we're starting to see some bifurcation in a lot of the best ones. But they're still got a long way to go. I mean, you look at the 6-month chart and you look, wow, this stock is up twice, 2 times, or 3 times since the gold price broke out in late February, early March, and the silver price started to move. But if you take a step back and look at the 4-year chart, it's just a small little bounce. So we still got a lot of mean reverting to go in a lot of these juniors and these quality juniors. But it's, warning, it's still a stock picker's market, and you got to be in the best ones.
Yeah, Dave, it still has been more of a rifle approach than a shotgun approach in the sector, and you got to be in the better quality names. But when you talk about silver, it's got a lot different chart than gold, and the silver stocks usually outperform gold stocks, but that's usually on the back of silver doing a little better. Now, silver was up above 32 not too long ago, but it's really rolled over hard. And as you mentioned at the onset, we're getting more of a safe haven bid in gold than we are just an across the board move in the commodities because copper is down, a lot of the other metals are down. So what do you make of silver, and is that going to eventually be a drag on silver stocks until it participates, or do you expect it to do its normal catch-up and then rocket launch higher?
Yeah, it's funny in silver, it's all about perspective and what chart you're looking at. If you take a look at the daily silver chart, you're like, wow, the silver price has really fallen out of bed. And before it turned around earlier this week, it became the most oversold it's been in over a year on a daily basis. But if you take a step back and you look at the monthly chart, we just had a monthly close on Wednesday with a huge indecision candle, and it closed right below its upper monthly Bollinger Band, and it's still in an uptrend. So the silver price is still making higher highs and higher lows on a monthly basis. And if you take a look at the silver stocks, like I said earlier, a lot of these stocks pretty much yawned at that huge move down. So that was telling us that, hey, this is really nothing to be concerned about. And a worst case scenario, if silver does not get back above 30 here pretty soon, sure, it could come down to test 26, which is really strong support. But I wouldn't think that the stocks would correct all that much if it did, based on what just happened when the silver price went down 10% in 2 weeks.
Hey, even that recent pullback just on that daily chart, silver never actually got to an oversold level on the RSI. So that could be encouraging, but you mentioned that 26 level. Is that what's critical here? As long as silver stays above 26, it seems to be in a new higher pricing level broadly.
Yeah, I would not like to see a close below 26 on a weekly basis. Daily basis, maybe, but I would not like to see silver go below 26 on a weekly closing basis.
So, Dave, as far as the stocks, would you be more interested in positioning in, if somebody's listening to this and they're seeing that the moves have started in the producers over the last few months, would you be more interested in some of the optionality plays of the developers and something like gold, or would you be more interested in something like silver stocks because they usually have more torque than the gold stocks and there's less of them?
Yeah, I mean, I think a healthy dose of both with more of a focus on the best silver plays because I think they're going to provide more torque, but they are more risky. I mean, they're higher risk and they're higher reward. But definitely, I think we're going to start to see some rotation out of these high-flying majors and mid-tiers and royalty companies. And you're probably going to see some rotation into the quality juniors. You've already seen it. And I think it's going to filter on down to the ones that haven't moved yet. But like I said, those ones that haven't moved yet, you got to make sure that you get into the right ones that haven't moved yet, because a lot of them haven't moved yet because they're really not investable.
What do you think about these silver miners, the smaller silver miners that are definitely off their lows from earlier this year, especially around March? They popped up. They had a couple month run. Many of them have given back some of those gains, but still, they're not screaming higher. They could have a lot more upside when you consider just how much they have sold off. It is a better pricing environment. How are you playing some of these smaller silver miners that should be making money now? They've moved, but not to a huge extent.
Yeah, I mean, I'm still fully invested in the silver plays that I'm invested in, and but if I had more cash to put to work, I would definitely put some more money into the higher quality junior producers that are starting to come off a bit that have U.S. listings. I mean, if you take a look at companies like Endeavor Silver and Gato Silver, they had huge moves off their major lows from late February, and they really haven't corrected much, and they're still making higher highs and higher lows from there with a sharp uptrend line. So if they came back down to test that uptrend line, I'd probably put some more to work into the smaller producers with U.S. listings, big board U.S. listings.
Dave, what do you think of the idea of the margin expansion narrative now, because we have higher metals prices while costs are moderating, that some of the highest cost producers you mentioned, Endeavor Silver, if people could put First Majestic in that basket, or there's other smaller ones, the Impact Silvers and Santa Cruz Silvers of the world, they're not great producers from a cost basis, but they're going to have the most margin expansion on a percentage basis, and that usually gives them a lot more torque than, let's say, the best producing silver companies like the Fresnios or the Pan American Silver. So what do you think about getting into lesser quality companies that have potential for higher margin expansion?
Yeah, I mean, as far as personally, I would look at companies that I would see as takeover targets that a major needs to add to their growth profile. And a lot of these little companies don't really do that. I think that some of them still need to merge with other companies to get bigger. Single asset producers. Also, I think we need to have more M&A for single asset producers, because look what happened with Victoria Gold recently. That just was a big red flag for a lot of these single asset producers, that if something bad happens to your one mine, your company's basically screwed. So I'd like to see more of that. So I would probably focus on companies that I would see that I would expect to also focus on that, and what are the companies that would merge together, and maybe a company I see is undervalued be taken out by another, that hey, I think that there's a good chance for a re-rate on this stock if the rumor gets out that it's going to be taken out, or even if a company does try to take it out, then you get that automatic pop.
Let's talk about some M&A then. One deal being the Integra deal, taking over the Florida Canyon mine. I think our listeners know the Florida Canyon mine well. It was in Rye Patch. It had its tough go in a couple companies, but seems to have been turned around just in really the last deal. Now Integra, which is an exploration company, not a mining company, now going to be a mining company, should be cash flowing through this mine. What's your thought on that deal and any other M&A?
Yeah, this is a company that I recently purchased and recommended to my subscribers, and I really like the deal. And I know it's a high cost mine. I know it's had its issues, but it makes a lot of sense for the company because it's right next to De La Mar. Their Nevada North project is close by, I think 40 miles away. So all three of these projects are now within a 3 mile radius. This gives the company automatic cash flow. But I think the stock sold off on the deal was more focused on the dilution that came with it, because the company also announced a $20 million financing at the same time. So the company now will have instant access to the high gold price. They'll have some cash flow, and they have another strategic partner in GMT Capital, along with BD Capital and Wheaton Precious Metals, and Alamos is also a shareholder. So this is another strategic partner with access to capital. Once the deal closes, and I expect it to close, I don't expect another company to come in and make a bid. Integra will have 31 million cash after the deal closes, and going into 2025, they expect to have over 20 million. And I expect that as far as the share count is concerned, they're going to have around 178 million fully diluted. And they'll also still have that big board listing to attract U.S. investors. So I really like the deal. This is the second merger to take place for Integra in the past couple of years. They took over Millennial Precious Metals and to add another development project. So now they have two solid development projects, and they have a cash flowing mine that is right next door. So Argonaut had been bringing down the cash costs for the Florida Canyon mine. At one point, it was all-in sustaining cost was over $2,000. They brought it to all-in sustaining costs now down to $1,600, which is still on the high side. And I think they expect to add 3 more years of production with the drill bit at Florida Canyon also. So bottom line is that this is a development company that is trying to build the next mid-tier producer in the Great Basin, and now they have cash flow and 2 solid development projects.
Well, and Dave, I think it's a little different than other development companies or exploration companies that migrate into the production role, because they're not building this mine. It was already built, it's up and running, and they're retaining the same team, the same operations manager, a lot of the same people that were there to turn it around with Argonaut. So people that are worried about, hey, you guys haven't been producers before. We just talked with the CEO, Jason Kosek, yesterday, and he mentioned it's really almost like its own business within our business because it's really all the same crew. And he thinks that the market is overlooking the multiplier effect they should get now as a producer and their access to capital as a producer and with the revenues coming in versus how they would be, what the access to capital would be as just a developer only. What do you think of that idea?
Yeah, I mean, it's going to increase operational and technical expertise to ramp up DeLamar, right? And it's going to have a revenue from a proven operation. So, I mean, there's a lot not to like about this. I understand as far as the high cost mine is concerned, but this is a company that is trying to build a mid-tier producer, and they needed to have some production. And this deal made the most sense because it's right in their neighborhood. And I think they got it for a good price. I mean, they're getting it for 95 million in shares. I think the net asset value is 128 million. And like I said, they have another strategic partner now. So they have 4 strategic partners. They got the access to capital. The share structure now is a little higher, but is still pretty good with 178 million shares out, fully diluted. And they do have that big board listing. And this is a proven management team. George Salamis has done a great job in building the company, and now he's the executive chairman. And he sold the initial Integra and made shareholders a lot of money, and I was one of those shareholders. So the management team knows what they're doing, and I think in the long run, it's going to be a very good deal for shareholders.
Yeah, hey, we all know how difficult and how expensive capital is right now, especially for exploration companies. So I think the market's going to be watching them closely, making sure that Florida Canyon mine does generate the type of cash that it needs to continue to fund development there, growth, as well as the exploration and moving the other projects forward. Very interesting deal, and I think it's always good to see some production asset brought into and explore, especially in these markets, again, when capital is tough. Dave, thank you as always for your time. Always interesting chatting with you. And this week, even more so with some of the news and the swings that we have seen in a number of metals prices and some of the stocks. Dave, I hope you have a great rest of your week. Everyone, click that link below to visit Dave's site, the Junior Miner Junky.